Future banking, an increasing demand for digital banking experiences from millennials and Gen Zers are transforming the entire banking industries as we know it today. Growing consumer desire for access to financial services from digital channels is leading a surge in new banking technologies that in so many ways is reconceptualizing the entire banking industry itself. Based on recent studies, the industry trends for 2021, where the 5 hottest technologies in banking are as follows. Number 1, digital account opening, open access to APIs or application programming interfaces. 3rd, video collaboration. 4th, P2P or peer-to-peer payments. And then finally, cloud computing growth in services. Hello and welcome to LATOKEN VCTV. My name is Vijay Tirathrai, and I'm your host for Founders Insights for this episode. And in this episode, we'll be focusing on the future of banking, and I shall be speaking to 2 entrepreneurs working on 2 very different opportunities in the marketplace. So let's begin with the first founder story. Digital banking transformation involves integration of data, advanced analytics, digital technology, user interface in all areas of financial institutions. And it's just changing the way that we are doing business processes from back to end. So as we speak on this, I'd like to bring on our first guest, Krish Gopalan, who is the co-founder and CEO of Fleece. Welcome, Krish.
Hi, Vijay. Good to see you. Thanks for having me. How are you?
I'm doing well. Thank you. Good to see you after several months. And thank you for being on this show today. So allow me to make a brief introduction to the audience, Krish, of yourself. So Krish Gopalan is the founder and CEO of Fleece. It's an emerging fintech firm that's headquartered in San Francisco and has a regional office in Abu Dhabi. Krish is a computer science engineer for over 15 years and have been working in large enterprises like the likes of Oracle, Hewlett-Packard, and several startups. His core passion has been in the areas of database engineering, data science, and architecting enterprise-grade applications for scale. So on a personal note, I know Krish to like his coffee. He loves trekking and backcountry riding in his free time, and he's an aspiring astrophotographer. Something we'll get some time, we'll chat about it, Krish. But firstly, welcome back, and let's begin with what is Fleece and what is it that you're trying to solve in the marketplace?
Perfect, yeah. And thanks again, Vijay, and welcome to all the folks watching. My name is Krish Gopalan, and just want to give a quick sneak peek into who we are. We are Fleece. We are an emerging fintech startup based out of San Francisco, and we're solving for the last mile challenge for banks when it comes to customer experience. So we all know that banks are lagging behind when it comes to delivering the experience that's needed in today's world. And we are there to bridge that gap. So banks are trying their best in terms of providing that level of experience, but they are falling short when compared to fintechs and challenger banks and all the other competition that's out there. So as much as it's a problem for the bank, we also realize it's a huge opportunity for the bank to engage with their respective customers. And that's where Fleece comes in. We are pro-bank in a sense that we want to help banks fast-track their digital journey using our platform of services. So when I say it's a platform, it's a combination of services that can be embedded within the banking application. So we are here for the banks. As much as we are a fintech startup, we are here to grow and help banks get to markets faster and deliver an elevated customer experience. So that's a quick sneak peek. We'll talk more about it as we go along.
So that's great. And I want to just break it down a little bit for our audience to understand. So when you reference to customer, who exactly is the typical customer that you are addressing, and how big is the market that you're addressing? So let's begin with that.
Sure. So our end customer is the end banking consumers like you and me, and the small and medium enterprise businesses. But we get to that stage through the bank. So in a way, our immediate customer is the bank itself, and the experience is consumed by the end customer. So our solution is B2B2C, if you will, which is to the banks, to the end customers. So we do sell our solution as a SaaS platform to banks of all sizes. So that's.
But if I can just be a bit more precise, so that you're not serving the neobank market, which are basically the upstarts. You're actually addressing the traditional banks, and they are challenged technologically to basically take a leap forward. And essentially, you are giving them a one-stop solution in terms of improving the user UX UI experience, the customer journey experience. And as opposed to perhaps, investing that technology in-house, you're providing them a banking as a software solution. Would that be a way to say it?
Correct. That's absolutely right. So we are not targeting the neobanks and digital banks. We are working with the traditional banks to fast track, in a sense that Fleece has created the developed use cases, which includes digital onboarding, which leverages eKYC, video onboarding, conversational AI to cut down on contact center costs. So we have these predefined use cases, which we call microservices, that can be leveraged by the bank. So they don't have to spend a lot of time and effort building their own engineering team. They can just leverage our services, which are completely plug and play, and deliver the same level of experience that another fintech or a neobank delivers.
Now, I noticed that you are based out of San Francisco, and you've got, I presume, some customers are there. Why, and what is the interest in the Middle East?
That's a great question. So yes, we are based out of San Francisco. We are right now, as we speak, targeting the tier 2 and tier 3 banks, which are credit unions, community banks, and regional banks in the US, which we believe is an underserved market when compared to the large banks. So that's the immediate market in the US. But GCC, we believe, is a huge opportunity, which is untapped. And it just happened by chance that we got into GCC. We presented in a fintech conference called Middle East and Africa Fintech Forum back in 2020. And we garnered a lot of interest by the banks within the region. And then one thing led to another. And upon research, we found that banks are much more receptive to fintech solutions in the GCC, especially UAE, Bahrain, and more recently Saudi Arabia. So we believe it's easier to get to banks faster. So that's number one. Number two is we do realize that the government and the regulatory bodies are creating a very robust regulatory environment for the fintechs to work effectively with the banks. So for us, for a small startup like us, it gives a great platform to liaison with, with the regulatory bodies and get to the banks faster. And I want to quickly mention Techstars and Hub71, which have been a phenomenal support for us over the last 6 months, because they've been a great bridge for us to get to banks faster and kind of sell our solution. So that's the reason why GCC, although I should say it's a smaller market than US, but it gives us a great platform to establish and serve the market much faster than the other regions.
Well noted. It's really interesting when you say the second tier banks. I would, what forms the impression in my mind is that clearly the tier 1 banks have the internal resources to invest, but in these sort of technologies. But whereas mid-tier banks basically can get an off-the-shelf solution and get going with their digital transformation. Speak to me, maybe just make me a better understand, what is the difference between a banking as a software versus just a SaaS solution for financial institutions? And what is so great about your technology that's you could argue is defensible against your competition?
Great. Yeah, that's a great question, Vijay. So software as a service is a niche where smaller solutions, smaller use cases can be tackled. For example, Digital onboarding could be a completely SaaS solution. Could be, accounting could be a SaaS solution. Conversational AI could be SaaS. So these are smaller use cases, but banking as a service becomes a one-stop shop for the bank. So that way, banking as a service, fintech as a service providers like Flask can be the one-stop shop for the banks to get and fast track their digital journeys, in a sense that they don't have to go through the due diligence that they would have to do with multiple startups. They would just have to do one set of due diligence, and we go in at the stage wherever they are in their digital journey and keep embedding our solution and keep enhancing their journey. So it becomes a one-stop shop for the bank. That way, it cuts down a lot more time in terms of getting to markets.
Very exciting. Looking 5 years down the road, which software players do you think will dominate the banking industry?
So I think it's going to be a platform play, in a sense that the infrastructure players, infrastructure as a service, platform as a service players are going to be much more scalable in the long run. I think those are the players that will eventually win in the race than the smaller, the niche use cases who could have a short-term win. But eventually, I think the smaller players would be acquired by the bigger banking as a service players like Finastras and even the core banking providers like FIS, Jack Henry, and they're going to be consolidated to provide a complete platform as a service solution. So I think 5 years down the line, banks are going to embrace this tech much more confidently than today.
Right. So we talk about in the context of where we see the market evolving and shaping. We also talk about newer banks versus incumbent banks, which is the clients that you serve. Who's going to win the race when you look out, say, 5 to 10 years? Where would you put your money, Krish? I want to know that.
It's going to be a mixed bag, Vijay. Short term, we all know for a fact that newer banks are eating away from the incumbent banks, and that's a growing trend for sure. But my belief is that incumbent banks, the traditional banks, are going to play catch up much faster than we can imagine, and there's going to be a lot more adoption, and the trust is going to come back to the traditional banks. They've been around for a long time. They are going to be around. They're not going to go away, at least for the next 2 decades. So eventually, we think it's going to be the traditional banks.
So you think it's going to be, because I see a lot of in different markets around the world, particularly in Asia, that central banks are issuing out digital licenses to newcomers who are non-traditional, financial institutions that are penetrating the market because they have a large consumer base, perhaps. That is, airlines, petroleum companies, to name a few. I have a question from an audience here, Krish. Sujata Jha would like to know, as a one-stop shop, would you be able to provide continuous upgrades and updates to the existing clients?
Hi, Sujata. Thanks for the question. The answer to that is yes, because we are a on-premise solution. We containerize our solution and drop it or deploy it within the bank's infrastructure. So a lot of these updates can be enhanced. And the best part is it can be done so seamlessly, which means that, for example, if a bank is going to implement conversational AI, it could just be a widget. So the next time that can be, the user updates the app, they're going to see a small floating widget. They can tap on it, ask questions in any language. So it's going to be a seamless experience for the bank and for the end customer. So the answer is absolutely yes.
Krish, I'm afraid we that's more or less the time we have. But before you run away, let me ask you: you've been for most of your career a solutions architect for the likes of Oracle, HP for many years. How's been the switch from being a solutions architect to being an entrepreneur? What have you prepared for, and what did you not envisage?
So it's been an amazing journey. The switch is always not easy. I tried it once before. I did a B2C fintech startup back in 2015. So I do have prior experience doing a startup. This is my second startup. It's a 10x the adrenaline rush than working for large or small enterprise. So it's been a great journey that so far. In terms of preparation, I think market research, knowing the problem that you're going to solve and being passionate about solving that, I think that's the most important thing. So once you identify the problem that you're going to solve for and create a solution for it, I think you just have to keep, day in and day out, you have to wake up to it and see what unique thing and different aspect you can do and get to the market. So yeah, that's the best part about being an entrepreneur. And yeah.
Krish, it's a pleasure to have you on the show today, and great to see you. Wish you all the best in your endeavors in the Middle East. I'd like to now move on to our second founder story with China Q. Before I introduce her, my next founder is actually, we'll be talking about decentralized finance, which is a global peer-to-peer system for storing and transferring of digital assets. And this is bypassing the traditional banking central system as we knew it. So to learn more about this, I'm going to bring in China Q on stage to join us for a great conversation. Hi, China, how are you?
Good. Hi, Vijay. How are you?
Good to see you. China, I'm going to introduce you just very briefly, and then we'll get into a nice conversation. Now, you're the co-founder and CEO of Definer, which is a P2P decentralized finance using crypto assets in a form of lending, asset-backed lending for savings and loans. You're going to talk a little bit about that, but you have also been a very experienced entrepreneur and an advocate for women leadership. And your company is based out of Minnesota in the US. And I believe you just opened an office in China as well, in Shanghai, which is where you are there right now. So let's dive into the conversation. Can you explain what your company is, which is called Definer, and what is it trying to solve in the marketplace?
Yeah, for sure. Yes, first of all, thank you for having me. So like Vijay introduced, we're Definer, decentralized finance innovator. So yeah, we are based out of Minneapolis, US. The problem that we're trying to solve, when we're trying to pitch Definer, it kind of evolves over time. Originally, we were trying to say about, how we're going to solve the traditional finance problem, which over the past years, we have seen the whole industry have come together, in helping solving the problem. So Definer is more focusing on nowadays to solve the problem right now in the DeFi industry. That's decentralized finance. So if you look at the current DeFi lending protocols like Compound, Aave, or even us, only 30 tokens in total that are supported. But then if you look at the whole market in CoinMarketCap, there are 6,000 tokens that are listed on there. So why is that? The problem actually lies in the liquidation mechanism. It's very hard to separate out the risk. So that's why the mainstream lending protocols like us, we are only supporting, like higher liquidation tokens. So what Definer is trying to solve now is to create a true permissionless lending protocol for all the tokens that will have an opportunity to open their own lending market. So it's true permissionless, configurable, and with the privacy 100% protected.
I like the phrase permissionless. I suppose that implies that you're basically bypassing the central banking system, and it's really peer-to-peer exchange, right? So there's no intermediary involved. But I would imagine your platform takes a cut or commission on each of those transactions. So just to be understanding much better around the business model, I suppose this is a double-sided marketplace where you have both the lender and the borrower. Could you speak to us a little bit about who are these typical customers representing those groups, and what motivates them to come onto your platform?
Yeah, for sure. Yeah, like you mentioned, Vijay, it's a double-sided market. We are both facing, to business and also to consumers. So we have institutionals and retail as well. For institutional, for example, there are big funds like token funds. To them, their money is their commodity. So when they have idle funds, they can deposit to platforms like DeFi to earn passive incomes. So that's the motivation for the lenders. Same with the retail consumers. Sometimes they are tech savvy. They wanted to earn passive income. They come to deposit their assets to DeFi. On the lender side, I mentioned a little bit about, the problem that we're trying to solve. With that, we have a new product, DeFi 2.0. It's a true permissionless lending protocol. So that kind of just opens up more opportunities. So startups like crypto blockchain startups still have an opportunity to come to DeFi, to borrow funds. So instead of traditionally raising from VCs, they can start a ILO process, initial loan offering on DeFi, where they deposit their tokens on our platform as a collateral and then borrow money from the community. So in that case, for them, is that one, it's much faster, it saves them the hustle. And then secondly, it gives them a very important early stage to engage and involve their communities.
Could you give us a sense of what those interest rates are trending right now versus commercial rates that you might get in the traditional banking difference? So our viewers kind of understand, is there a price differential?
Yeah, so it's actually very significantly right now for US tokens like USDT, USDC. The market is down a little bit, but still around 20 to 30% APY. USDT, USDC, that's one-on-one packed to US dollars. For other tokens, there are higher interest rate as well. So it's significantly higher than the traditional finance.
That's really remarkable for that sort of range of interest rates differential that you see today. If you look down the path 5 years down the road, where do you see the market evolving? Is there going to be one mega exchange where these collateralized crypto assets will be used for lending and borrowing, or do you see this as a multitude of different exchanges serving different industry niche or industry sectors, so to speak? Tell us a little bit about it.
I think it's for sure the second one, because I think the nature for blockchain and crypto, it comes from decentralizations. There's not going to always be like one mega platforms for all. And also, I think, with the different platforms have their different positions. There are exchanges, so it's a whole ecosystem. There will be exchanges, there will be lending protocols like us. There are decentralized exchanges called DEX, there are insurance providers. It all forms to the overall ecosystem. And then, speaking from the market perspective, we already seen a tremendous growth since last year. The whole total value locked in DeFi was 1 billion. And as we're speaking right now, it's 50 billion. So just a little bit over a year time, it just grew 50x actually. So I think in the next 5 years, for sure, it's going to keep on growing for the total value locks.
Is that primarily driven by a lot of retail investors, but now you also see a lot of institutional investors accepting crypto exchanges, a lot of venture funds investing in crypto assets, and there has to be some way to create liquidity around those investments. What would you say are the driving forces for this growth right now? I mean, I would argue, just to add one point, is there also a sense of weakening confidence around fiat currencies? Could you speak a little bit about that?
Yeah, definitely. I think the fours are a lot, like you mentioned, the retails. I think the retails are the first one that started the buzz. And then when institutional starting to, they hear about it, they start to do their research, they're coming in. Like that's why right now nowadays you've been hearing Elon Musk that's very outwardly speaking embracing Bitcoins and crypto. Also with PayPal is accepting crypto right now. A lot of this actually because of regulations. I think just US itself, they figure out the regulations that helps to drive the industry forward. And then also for people's perspective, why all of a sudden people know about DeFi last year is that because of the staking method, the liquidity minings, retail people they're starting to notice that it can profit them significantly. That all help to contribute to the market growth.
China, this DeFi by technical means uses blockchain, and I guess smart contracts is implied. And there's, of course, greater control over the interest rates, you could argue. But doesn't these use cases, both in terms of controlling the interest rates as well as smart contracts, alone threatens the world's established legal and financial systems? And do you see that there will be a backlash by governments at some point to overregulate this particular sector?
Yeah, I mean, there are already a lot of regulations, the talkings right now, like no matter if it's in the US or in China. For now, I think we're at a stage, at a crossroad, where we need to figure out, how we're going to regulate. Doesn't matter if it's fiat, it's crypto, it's stable coins. But I think in the future, a perfect future is a cohesive thing for both centralizations and decentralizations, because the nature of crypto is to be decentralized. You can never be truly decentralized if you have a government, if the society is set it up like this. But I think, once they figure out the regulation issue, which I'm already seeing that the government is making a lot of effort. For example, in the US, OCC, the Office of Comptrollers for Currencies, they are already putting stable coins as a part of their regulations. You can do taxations, they can liquidate it. They already figure out. And with that, Wall Street is more comfortable. Then you see the following series of events, where you have the Coinbase IPO, which never happened before for any crypto companies. And then you see...
Sorry to cut you off, but we'll take a quick question from Sujata as well. She's just say, if you could just answer this very briefly, how do you address the lender's concerns about the borrower's credit worthiness? In other words, what happens if there's a non-repayment?
Yeah. So for us, first of all, right now it's all a collateralized loans, and which is executed by smart contracts. So if they're not paying back, the liquidation process will be start automatically.
Right. Okay. I guess you got those safety mechanisms in place. Last question before we jump off. I know this is a little sensitive, but I need to ask you, being a U.S. entity operating out of Minnesota, you've just opened an office out at Shanghai. That's why you're in China right now. Let's talk about China being a central player in the crypto world. Help us understand, given the fact that the government is very centralized, how do they accept decentralized finance?
Yeah, the Chinese government always have a bittersweet feelings about cryptocurrencies. But I think to the Chinese government, it's the regulation, first of all, I don't think it's a bad thing, because probably all of you hear about the recent regulations issues in China. It actually helped to wash off a lot of the scammer projects. Help the industry. In a sense, it really helped the industry to grow. I kind of just mentioned that we need to reach a perfect a perfect stage of centralization and decentralization. You know, once the regulation piece is figured out, and which I believe they're trying to do so, we'll reach a perfect harmony of, in a sense, they have their centralized piece, but still the decentralized protocols like us can grow and thrive at the same time.
Channa, that's all we have time. Thank you for being on the show. Great to see you. And I wish you all the success in, it's an exciting space, of course. You're going to see phenomenal growth with DeFi for sure. Wishing you all the very success.
Yeah, thank you so much, Vijay.